So good to have you join us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have a lot coming up today, so let's get started with the day's highlights. The Bank of Korea cuts its forecasts for economic growth and inflation while holding its key interest rate steady at 1.5%. We'll sit down with an expert to talk about this. Korea's rice wine or makgeolli exports to Japan take a hit from the weakening yen and changing tastes of young drinkers. In the first of the 5 sessions President Park Geun-hye has scheduled with government bodies, economy-related ministries have been briefing the president about their plans for the new year. Our economics correspondent Hwang Ji-hye starts us off.
A total of 7 economy-related government offices in Korea, including the finance and trade ministries, reported their policies for this year to President Park Geun-hye on Thursday. The focus is on boosting domestic demand and exports that are facing risks from uncertainties like the slowing Chinese economy. The government has pledged to front-load this year's budget in the first 3 months. The amount will be around $6.5 billion more than that executed in the same period last year. It has also vowed to regularize major sales events to boost spending.
A massive discount event will take place every November. We will also improve regulations related to visas and duty-free shops to prop up consumption by tourists.
Korea also aims to maximize the benefits coming from its FTA with China by providing training programs for 25,000 exporters that don't know how to get the most out of the trade deal. The ministries have put an emphasis on easing regulations to boost investment and come up with new growth engines. Designating regulation-free areas across the country is part of the plan. Policies to defuse the threats posed by snowballing household debt include using a state housing fund to switch mortgage loan holders' short-term loans into longer-term loans and swap loans carrying floating rates into those with fixed rates. The briefings mainly come from the government's economy management plan for 2016 that was released about 1 month ago.
There are still 2 policy briefings on the economy to come to ensure that President Park Geun-hye's 3-year economic innovation plan produces tangible results. Each briefing session will focus on fostering growth engines and creating jobs for young people. Hwang Ji-hye, Business Daily.
Meanwhile, Korea's central bank continued its wait-and-see approach by holding its key interest rate steady for this month in the face of ever-changing internal and external economic variables. Our Kim Min-ji has the story.
It was a widely expected decision. In its monthly monetary policy meeting on Thursday, the Bank of Korea kept its key rate steady at the record low of 1.5% for a 7th straight month. The central bank's decision comes after the U.S. Federal Reserve raised its interest rates for the first time in nearly a decade last December, which sparked concerns it could trigger a massive capital outflow from emerging economies, including Korea. Some analysts have said the Korea Central Bank must raise its own rates to prevent that from happening. However, BOK Governor I화여대 has said on previous occasions the Fed's rate hike isn't necessarily a cause for concern at this time, mainly because the move was widely expected and the pace of increase will be gradual. For now, Korea's central bank will maintain its loose monetary policy in the face of uncertainties at home and abroad.
The Korean economy has seen modest recovery driven by consumption, but exports have continued to slump, and China's slowing growth has also increased global market volatility.
The Bank of Korea also cut its growth forecast for this year to 3%, down 0.2 percentage points from its earlier projection. The central bank said that the global economy is expected to stay on a modest recovery track, while noting that external risks, including gyrations in the Chinese financial market and low global oil prices, remain a source of concern. In terms of inflation, the BOK also revised it down to 1.4%, short of its 2% target, largely due to cheaper oil. Kim Min-ji, Business Daily.
And to tell us more about this, Professor Kim Se-won from Ewha Women's University joins us in the studio today. So good to see you, Professor.
Pleasure to be here.
All right, as expected, the BOK froze the key interest rate for 7 straight months at a record low of 1.5%. Now, amid continuing turmoil in China's markets, a lot of emerging countries have been adjusting their monetary policies. So why did the BOK decide to leave the rate alone this month?
Well, the Bank of Korea has been reiterating their monetary policy position with two factors. The first is the current economic situation, the slow economy and high unemployment cannot be solved by a lower interest rate, but by economic reforms. Second is declining Chinese economy is not over yet. So given that there will be high possibilities of further declining Chinese economy. So given that position and given uncertainties in Chinese economy, it was hard to Bank of Korea to change its interest rate.
Now, the central bank also cut its growth forecast to 3% from 3.2%. Now, why the cut in growth outlook then?
Well, compared to the last year's Bank of Korea's 2016's economic growth forecast, three things have been changed. The first is higher U.S. interest rate, and the second is fast declining Chinese economy, and the third is a lower oil price. Particularly, first and second factor have a together significant negative impact on Korean economy. So that's why they decreased economic growth forecast for this year. However, I need to point out that Bank of Korea's 3.0% economic growth rate is much higher than private institutions' forecast between 2.5% to 3%.
Now, we talked a lot about the external factors, but we can't leave out the domestic factors, of course. Last year, the Korean government put forth some significant stimulus measures in order to boost the local economy, but they also resulted in ballooning household debt as well as overheated real estate market. So how do you see these issues panning out this year?
Well, previously, the theme of the Korean government's policy was pretty simple and straightforward. Increasing domestic consumption and domestic investment through stimulating a domestic housing market. But in the middle of that process, they met unexpected obstacles of increased household debt.
Right.
So therefore, they can't pursue the previous theme of the economic policy for this year.
All right, but despite all these factors, the Bank of Korea still kept the growth forecast at the 3% range, which some say is still overly ambitious.
Well, actually, there are two major think tanks, which is run by Korean government, which is one of them is Bank of Korea, and another is KDI, which is Department of Finance thinking tank. But according to previous released KDI's economic forecast, growth forecast for 2016, it is a 3.0%, which is exactly the same as Bank of Korea's today's release.
Right.
So that kind of disappointing impact was pretty much reflected in the market already.
All right, let's talk about inflation forecast. The central bank also lowered its inflation forecast by 30 basis points to 1.4%. Can you tell us more about this?
Well, that really related to lower than expected economic growth. But that the question of whether Bank of Korea will decrease interest rate or not about lowering inflation forecast is a matter of their position between interest rate target, inflation target and economic growth target. Ultimate goal of the Bank of Korea is stabilizing inflation. But given that slow economy, they can't ignore high unemployment and lower growth rate.
It definitely looks like it's going to be a hard balancing act for BOK this year. But some experts actually forecast that it will still carry out another rate cut this year. Do you see that coming?
Well, that really depends on exogenous or foreign conditions of the economy, like Chinese economy and United States interest rate, another interest rate hikes. So depending on that situation, the domestic and key interest rate will be determined. But my personal expectation is Bank of Korea cannot ignore the slow economy at all. That's what they have been doing in the past. So there will be one or two chances of lowering interest rate in Korea.
Now, in the midst of all this, the Korean won actually nosedived to a 5-year low this week. It might be good news for exporters, I guess, since they have been struggling all year last year, but creates a lot of uncertainty for the financial market. So what kind of problems can stem from this?
Yeah, that's true. But according to economics textbook, the huge trade surplus that we have right now accelerate the appreciation of the Korean won against the US dollars and Japanese yen. But that is not happening right now because US interest rate been increased in the last month. So that there will be expected outflow of the money from Korean market. That is the major factor of depreciated Korean won today.
Definitely something to put our eyes on too.
Exactly.
All right. Thank you so much for coming in today, Professor.
Thank you very much.
Asian stock markets were seeing red on this volatile Thursday before working their way back up following a major sell-off in Wall Street and a continuing crude oil slide that put prices at a 12-year low. The Dow Jones Industrial Average had closed 2.2% lower, and NASDAQ was down 3.4% on Wednesday. Under pressure, investors offloaded risky assets on Japan's main bourse. The Nikkei 225 nearly wiped out all of the gains it had made the day before. After plummeting 4% in morning trade and falling below the 17,000 mark for the first time since September, it closed down at 17,240. Over in China, the Shanghai Composite was seen back in positive territory in late trading after sinking below its August low in last summer's stock rout. China's 10-year bond yields advanced to a record low at 2.7%. And with that, let's now take a quick check on how the markets fared here in Seoul today. Korean shares ended lower on Thursday as investors' sentiment was hit hard by losses in the Chinese and U.S. stock markets. At the closing bell, the benchmark Kospi dropped 16.27 points to close at 1,900.01. While the tech-heavy Kosdaq also slipped 2.84 points to finish at 683.19. On the foreign exchange counter, the Korean currency also dipped to an over 5-year low against the U.S. dollar, ending at 1,213.41 against the greenback. Plunging oil prices have continued to dominate headlines around the world, and these sliding prices are also spelling trouble for Korea's financial markets. Our Son Jung-in tells us more.
With oil-producing countries facing increasing pressure from the plunge in global oil prices, many of them are opting to withdraw their investments from emerging markets, including South Korea. 3 oil producers, Saudi Arabia, the United Arab Emirates, and Norway, have pulled some $12 billion out of the Korean stock market over the last year. What is more worrisome is that the oil money exodus is forecast to continue, exacerbated by the rising volatility in the Chinese market and fresh uncertainties in other regions around the globe. With the US dollar gaining strength against the weakening yuan, the dollar price of raw materials has risen, which could weaken the Chinese economy even further. And if the demand for oil decreases, oil prices will fall again, resulting in an oil money exit.
The raw materials price drop is a risk factor for the domestic stock market in the short term. But there is a chance the domestic market could improve if raw materials prices bounce back in the first quarter.
The adverse economic conditions in the Middle East have also taken a toll on Korea's push for privatization of Uri Bank, as its Saudi investors have canceled new investments to help narrow their deficits. Son Jung-in, Business Daily.
Korea's favorite rice wine, or makgeolli, is facing some tough times. The alcoholic beverage that had enjoyed a heyday in exports to Japan now only reaches 12% of the orders it pulled in then. Our Eunice Kim tells us why.
It had ridden the Hallyu wave into Japan, and even the 2008 global financial crisis didn't have it bat an eye. While beer and soju were dealing with declining sales, makgeolli was busy making its way up. $5.4 million worth of the sweet, unfiltered rice wine was exported to Japan in 2009 and recorded an 8-fold growth within 2 years, to the tune of $48.4 million. But the rush wouldn't last. After touching its peak in 2011, makgeolli exports bound for Japan would whittle away, losing nearly all of the gains it had made since 2009. It only sold $6 million worth in the first 11 months of last year. Following a diplomatic low point set off in 2011 between Seoul and Tokyo, and mixed in with a declining yen and shifting palates among the young to carbonated cocktails, the domestic makgeolli industry took the hit. Production was scaled back as the value of exports overall plummeted 77% between 2011 and the first 11 months of 2015. Japan still took up more than half of that final $11.7 million sum last year. With relations between the neighboring countries on the mend, the Food Ministry is planning makgeolli promotion events in Shinjuku, Tokyo, as producers hope to expand to other rice-based markets. Demand is growing in China, Hong Kong, and Taiwan, but still minuscule in comparison to the land of the rising sun. Eunice Kim, Business Daily.
And that wraps it up for now. But we'll be back tomorrow with more at the same time, same place for your Business Daily. Thanks for watching and see you soon.